listen, a lot of folks were getting excited about the fact that maybe you were seeing this, like the consecutive quarters of decelerating growth in AWS bottoming out. And that answer from the CFO to Deirdre suggests that they don't have a lot of visibility right now. You know why? Because their customers don't have a lot of visibility right now. And when you think about it, I'm just going to kind of take it back to Microsoft. Yesterday, we spent a lot of time talking about Microsoft and those great results. Think about this. We also talked about this Copilot 365 that they're going to start charging for on November 1st. What if those same enterprise customers are optimizing cost in and around some of the seats in which they license this sort of software? So what I'm saying is we're not done yet. We don't know about this. And a lot of these companies have also been cutting costs as it relates to headcount. When you have reduced headcount, that means you have reduced seats for these sorts of licensed software and the like. So I just think this is going to be a theme that we hear a lot about. So just if you think about the last 3 days that we've had of all these major, companies reporting, it's like, last quarter, these guys were good. This quarter, they're bad. I think it's going to keep ping-ponging like this for a bit until we get more visibility about the economy.
I mean, what Amazon is telegraphing with its guidance and with the comments about cost optimization is that all customers, whether it be retail or enterprise customers, they are looking hard at what they're spending. And that's not the message that you want to hear in these stocks at this point.
No, it's a message we've heard from everybody. On some level, if you read between the lines, and if you read between the lines on housing and less projects, and people are definitely pulling in. But I think also for people that were expecting Amazon to deliver a really decided vote to break the tie between Google and Microsoft, this one kind of came down the middle. This one really doesn't really tell you all that much. People are encouraged by the operating, the op margin, and that was really impressive overall for the company. Came in about 300 basis points better than expected. But then on the guide, they gave it all back. So the midpoint of the operating income for the 4Q guide implies that the operating margin is coming back in. I'm just reading a couple reports from the street that are coming out here. Our friend Brent Thill said something like on his headline, 12% AWS growth, just not enough to keep the goblins away, as we are so close to Halloween here. So anyway, I don't think these numbers are terrible. Remember, Amazon has outperformed the rest of the mega cap space over the last couple months after badly underperforming them. Some of this is just what we get to. These numbers aren't great. They're not terrible, but the stock's done well.
So I think Amazon is a company that doesn't really care where their stock is trading in the short term. Mm-hmm. So I generally don't really give much weight to their guidance because they sort of put wide guidance out there, and I don't think they really care. That having been said, though, it's a little bit disappointing. I was hoping that that they would be more on the Microsoft side of cloud growth as opposed to the Google side, but. We'll see. It's very cloudy right now. There's some things that came out good. We'll get to Intel, for example. That was a surprise. But to Amazon, I'm long. It's not cheap for sure, but I think the story is still intact. If we have a weak fourth quarter, which sounds like we very well might, I think it won't be great. But the one thing I do wonder is if they mention Temu, are they losing share there?
Right, Temu and Shein.
Yes, yeah. And Shein, right, both. I want to hear that. I'm interested to see if that is, because they have not had a threat at all. Mm-hmm. And I wonder if this is maybe
I don't think they're losing share. I think Dan's been right to point out business spend is on the downslide. If we look at GDP, we saw consumer. The consumer's fine. The business is not fine. They're cutting back. So they're being judicious on their spend. But when you look at revenues beat, EPS beat, stock ratcheted up quickly. Then you look at AWS. We're not even talking about e-commerce anymore. This is not even an e-commerce business anymore. Granted, they're killing it on the e-commerce side as far as real numbers. This is only about AWS. If customers aren't spending because there's a geopolitical event or if there's something going on in the macro economy, that's a different story. The consumer is still strong. So I think we have to look at it in a different light.
Yeah, listen, I'd just say this. That operating income that you pointed to, that Debo mentioned, this company is operating really well, right? So it really comes down to, what are you willing to pay? To Steve's point, the North American retail business has never been valued at anything. It did outperform last quarter. They had better margins there. I think the street kind of liked it, but the stock is down 18% in nearly a straight line from those recent 52-week highs. So the expectations coming in were actually pretty low, despite the relative outperformance that you're talking about, Tim, over the last year. So, when's the last time you've seen $1 trillion or a company of this size relative to the index sell off nearly 18%, put up numbers like that and then sell off. Like, it just tells you about where investors are in this market in a way. And so to me, that leads me to believe that we're not done. And I've been talking about the lack of visibility a lot of these companies have. They were given a pass, it felt like, in the spring into the summer, but something turned in mid-July, right? When all of these companies, like Microsoft and Apple in particular, did not start, they weren't trading well on good news anymore. And I think that's a big shift that we've seen from the prior 6 months.